We have with us the Vice Chairman of HDFC, Keki Mystery. Keki, thank you for joining us on BloombergQuint. To begin with,
It's actually my first interview with,
yes, yeah,
with
it is the
BloombergQuint.
first interview with
So,
BloombergQuint.
first of all, congratulations and all the very, very best.
Thank you. To begin with,
So now instead of you asking me about competition, I will ask you how the competitive environment in your business is.
we will talk about it, but for now, let's talk about the merger between HDFC Life and Max. What kind of valuation do you see for the entire merged entity when it lists?
See, valuation is a difficult question to answer for the simple reason that HDFC's Life's valuation is a derived value. You have to first look at the market price of the Max, impute the market price for Life, for Max Life, and from there impute the market price for HDFC Life. So I think once now that the merger ratio and everything else is known, over the next maybe 7, 8, 10, 15, 20 days, markets will absorb that better. And once markets absorbs that and the share price settles at a certain level, that is the time when we can get a derived value for HDFC Life. So valuation is very, very subjective, so without getting into that. But the synergies of a merger are huge. Synergies are both in terms of top line growth for the combined entity and as well as saving of costs. Why top line growth? If you look at the two companies, both HDFC Life and Max have very strong distribution platforms, are very well recognized and very well known companies in the insurance field. HDFC Life has HDFC Bank as a major distributor. Max, amongst others, has Axis as a major distributor. So a combination of all the various distribution channels, coupled of course with the strong agency platform that Max has, brings to the fore in the combined entity a huge distribution platform.
On the issue of valuation, you said that the markets will determine. By the time this deal gets over, it will be 12 to 15 months, and we will already have one company, one life insurance company listed, and that would determine the way how the valuation of HDFC Life will also do. Was merger the easier way, or you could have gone the IPO route as well?
See, of course we could have gone the IPO route. I mean, that was the original thing that we were looking at. We said we would do an IPO. But the merger brings with it so much of synergy and so much of benefit that my sense is that the value that will be derived from the merger, both in terms of top line and in terms of synergy, which results in cost reduction, be it cost of reinsurance or various other ways. The benefit of cost reduction coupled with higher revenues will create huge benefit for the existing shareholders of both companies.
What about the kind of integration pain which will be there in which is typical in any merger?
See, any merger brings with it some degree of integration issues. So therefore, we've set up an integration committee. The integration committee has people both from HDFC Life as well as from Max, and they will work out to see what is the best form of integration and what is the best way of sort of going forward, products to sell and so on and so forth. So it's a little premature to talk about that. But having said that, in any large mergers, in the short term there is always some integration issues, but in the medium to long term the benefits that are derived from the merged entity are phenomenal. To my mind, the integration process in HDFC Life and Max is probably not going to be as cumbersome or as difficult it is, for example, when two banks were to merge, because to some extent the distribution is different, the products are to some extent different. So in that sense, there is a lot of synergy which comes in.
Mr. Parekh mentioned about the fact that between HDFC and Standard Life, you'll own around 66%, and there's an option to sell a few percentages to Standard Life. Can you explain that?
So Standard Life's shareholding in the combined entity would be 24 point something, 24.1 probably. HDFC shareholding would be 42.4. Now Standard Life wants to keep at least a 25% shareholding in the company. So we are talking of 1% addition, not even one, about 0.9%, a little more than 0.9% shareholding in the combined entity. So we will help Standard Life get to that 25% level. If it is possible that some of the existing shareholders may sell, of Max may sell, it is possible that we may sell something to them, but we will make sure that the shareholding in the combined entity is 25%.
Ms.
But we are not talking of large numbers. We are talking of 1% or less than 1% of the combined entity.
Are you fine with keeping a 42% stake in the merged entity?
See, in any IPO, if we were to do an IPO, for example, if Standard Life wanted to hold 35% as they were, and they were not wanting to dilute at that stage, and the public is to hold 25%, then 60% is held between Standard Life and the public, which means we would be left only with a residual 40% shareholding. So in any case, we were reconciled to getting to a 40% level, if not in year one, over a period of 3 years.
When you list, the public shareholding or the retail shareholding in the entity will be very less, because you have institutional shareholders, private equity firms, Azim Premji, all will be part of the 19% which is there, and so the liquidity will be much lower in the market for that. How do you plan to address that issue?
See, over a period of time, this will get sorted out, because some of the institutional shareholders all these institutional shareholders are not going to remain shareholders for the next 10 years or 15 years. At some point of time, some of them are private equity investors. They will look at selling their equity, and that would necessarily be bought by either retail investors or foreign institutional investors. The combined foreign ownership is well within, significantly lower than the 49% limit that is permitted under law.
Is there a plan to raise further funds for HDFC Life for the combined?
Not in the short term. Maybe over a period of time, as growth picks up in the industry, yes, there will be a need to raise capital. But again, there we must bear one or two things in mind, which is that the opportunity for growth or the potential for growth in the insurance business in India is huge.